Morning, guys. It's Thursday, July 31st, 5:23 a.m. Central Time. Grain markets are mixed this morning, pretty quiet overnight trade. December corn futures unchanged at 412 and a quarter. November soybeans down a quarter cent at 995 and a half, fell below $10 for the first time in a while yesterday. December Chicago wheat up 1 at 545 and a quarter. December Kansas City wheat up 2.5 at 544 and 3/4. December spring wheat down a quarter cent at 599 and 3/4. Let's start off with the forthcoming Brazilian growing season.
Another massive soybean crop is expected in Brazil, with early planting typically getting underway in September. This week, Brazilian consulting group DATAGRO pegged the crop at a whopping 182.9 million metric tons. If realized, this would be an increase of 8.2% compared to last year's record crop of 169 million metric tons. USDA recently projected that farmers in Brazil would harvest in excess of 120 million soybean acres compared to 82.5 in the US. DataGrow also expects a record Brazilian corn crop of 140.9 million metric tons.
Huge early crop estimates. And of course, this is a crop that has not been planted yet. USDA also has an estimate of the forthcoming Brazilian soybean crop out there at 175. So this number from the private group is much larger than that. I don't know if it's super important to focus. Well, it is important, but keep in mind that the production number hinges, of course, on weather. What is probably real or real-ish would be the acreage numbers. And USDA is projecting at this point that farmers in Brazil will harvest closer to 121 million acres of soybeans this year compared to the 82 and a half that we'll probably harvest here in the U.S. So Brazil continues to expand and at a breakneck pace. And this presents the U.S. farmer with a lot of problems. The way that it looks, Brazilian production and the expansion there may be slightly outpacing Chinese demand, which could reduce and probably will reduce U.S. export demand. Now, the USDA and everybody else, every analyst out there will agree, I think, that the growth in U.S. soybean demand is going to be domestic. We're going to crush more soybeans as time moves on. USDA is projecting a record crush number for the new crop marketing year, and exports will continue to flatline or become reduced over time. That's the way that we're trending. So, of course, yeah, you need weather to cooperate for these sort of crop estimates to come to fruition, but the acreage numbers are probably close to reality. Now, when it comes to corn acres, Brazil doesn't really expand or hasn't expanded the last 4 or 5 years. They've kind of flatlined. The U.S. hasn't expanded and isn't ever going to expand corn or soybean acres in any real meaningful way. So the big expansion in Brazil is in soybean acres. Another monster crop is expected. One of the questions that we'll get to go back to soybeans is probably this: like, why would China continue to buy any U.S. soybeans when Brazil mathematically could fulfill all of their needs? A lot of it's seasonal. China buys or imports beans from the U.S. in our like post-harvest time frame, October, November, December. There's not a ton of Brazilian soybeans typically left over during that time frame. The U.S. has a very well-established infrastructure through the Gulf and the PNW. It's easy to buy beans out of the U.S. Chinese crushers, as far as I understand it, they buy U.S. beans in advance, and they actually use the Board of Trade to hedge their purchases. So buying beans out of the U.S. still makes some sense for China, but that could be a trend that is not necessarily on its way out, but maybe reduced.
Soybean futures extended their decline for a fourth consecutive session on Wednesday. The November 25 contract fell nearly 14 cents to settle near $9.96 per bushel, its lowest level since early April. The ongoing sell-off has been driven by favorable weather forecasts. Cooler temperatures and widespread rainfall are expected across the Corn Belt in the near term. Weak export demand has added further pressure, with Chinese purchases projected to slow later this year during the peak of U.S. marketing season. Soybean meal futures also notched contract lows yesterday.
Let's look at a November soybean chart. So we fell below that early July low, and now we're below $10. There's a big trend line that comes in about 982 below the November soybean contract, and then you've got that April low at 971. So we hope that is some sort of support zone. There's not really much of a weather threat. We're going to talk about weather here in a second. I think the trade is perhaps becoming concerned a little bit about the fact that China hasn't bought any new crop beans. Usually they've started by now, and perhaps they will start soon. Maybe we'll see something reported later this morning. And there was a flash sale a week or two ago that we thought maybe could have been China, but officially they have nothing on the books.
Some parts of the U.S. Corn Belt have seen an excessive amount of rain recently. Over the past 7 days, parts of Iowa, southern Minnesota, northern Missouri, and western Illinois saw total rainfall in excess of 4 inches. Over the last 30 days, several Iowa counties have received more than 12 inches of rain, with some localized totals much higher. The state is slated to see drier conditions prevail until rain returns around Wednesday of next week.
There is some discussion among traders and analysts about the rainfall, which has been historically excessive in Iowa in particular. Over the last 30 days, the state of Iowa has seen 220% of its normal rainfall based on data from our friends at Crop Profit. Excellent map here. And you zoom in on Iowa, or some of these central to northernish Iowa locations. And yeah, a lot of areas saw 11, 12 inches of rain over the last 30 days. And I've heard localized totals in excess of 20 inches. I don't know if that's real or not. If you guys have some localized totals and you're in one of these counties pictured here, let us know. The forecast eases up on the rain for 7 days, and then you've got rain coming back in. There's a little bit of heat in the forecast for, I'd call it the western half of the Corn Belt. The most excessive heat that I'm seeing in the forecast, however, is more so in the plains, like McKenzie out in your neighborhood, whereas in places like Iowa and southern Minnesota, yeah, you may be a few degrees above normal, but I don't think that the market is concerned about that.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
20 questions with Matt Bennett was great yesterday. It was great. And it wasn't the most fun video to make because the topic was this: everybody is undersold. And we had a lot of questions from subscribers come in about grain marketing, old crop, new crop. And one of the big themes is, Joe and Matt, we've got bushels that we can't store. What do we do with them? Matt had some actual official recommendations that his group Ag Market has put out. And I always throw in my 2 cents on this stuff as well. Great questions from the premium crowd, as always. We talked with Paul Neefer, and I did my little rant yesterday on government payments. But if you're a farmer in this country and you're not maximizing your government payments through entity structure, through taxes, using lawyers and accountants, you need to be doing so because your neighbor is. And if you're not doing it the right way, you're going to be left behind. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee. There's no other obligation. Nobody will try to sell you anything else. Joe, $50. It's so expensive. I can't afford it. This is a drop in the bucket or a rounding error compared to the stuff that you guys pay to the big ag companies out there. Your fertilizer bill, your seed dealer, implements. I mean, this is nothing compared to those items. We haven't raised our prices ever. I've been charging $50 a month since 2016. So I'm not the one price gouging. You should support the little guy just for once and help us out here this morning. All right, I'm done with that rant too. I'm going to try to do less ranting.
All right, onward. U.S. ethanol production remains strong. Weekly output of 1.1 million barrels per day was up 1.7% on the week, but down 1.2% versus the same week last year. Ethanol stocks remain well above seasonal levels, totaling 24.7 million barrels. The print was up 1.1% compared to the previous week and up 3.1% compared to the same week last year. According to Reuters data, U.S. ethanol production margins remain healthy.
You want like a 3-cent piece of plastic from John Deere? $1,500. No, but I can't afford the $50 a month, Joe. All right, so I'm sorry. Ethanol production is great. It's great. Bright spot in the demand base, but it tends to be pretty steady eddy. Where we'd really love to see some growth in new crop would be in exports, and we've already seen growth. I mean, they're projecting a record program. We've got a record program this year, but that export number, I think, is going to be more so the thing that moves the needle. The stocks number is a record high seasonally, which I don't love. And some people think that this is because the people holding the ethanol stocks will be seeking to export more ethanol than they had in the past. And maybe that's why they're clinging on to some more stocks here.
The U.S. economy surged in the second quarter, with the Commerce Department reporting yesterday that GDP grew by 3% during the period. The figure exceeded expectations for a 2.3% increase and marked a sharp turnaround from the 0.5% decline in the first quarter. Also on Wednesday, the Federal Reserve left interest rates unchanged, as was expected. Fed Chair Jerome Powell emphasized the central bank's cautious approach regarding the inflationary impact of President Trump's tariffs. The announcement caused the Bloomberg Dollar Spot Index to rise nearly 1%. The index has gained roughly 2.7% over the past 5 trading sessions, notching its strongest 5-day run since October of 2022.
A lot of people are hating on the GDP print. They're hating on it. And the reason they're hating on it is because the higher GDP print was almost exclusively a result of a drastic reduction in imports. So GDP is gross domestic product. It's not gross foreign product. So when we reduce imports, it helps GDP. You look at the GDP formula, and it's, personal and public consumption plus government expenditures plus public and private investment. And then you've got to X out exports and imports. So if imports are drastically reduced because of tariffs, which they have been, it's going to be a big boost to GDP. And that's what we're seeing. Consumer spending was up just a little bit. Investment was actually down. Government spending was close to flattish. Exports off just a little bit. But don't think about it too hard. The GDP is positive, and the economy appears to be in pretty good shape. I know the farm economy is not in good shape, but this is the Joe Public economy. What did cattle do yesterday?
Cattle futures had another great day. Live cattle were $127 to $335 higher. Feeder saw gains ranging from $172 up to $282. Box beef prices continued to slide. Choice was down $220 at $361.99, and Select was down $157 at $340.91.
Outside markets are moving this morning. Stock market's sharply higher. Dow Jones is up 150. S&P's up 64 points. I think that's got to be new all-time highs. Treasuries are up. U.S. dollar's up just a little bit. And U.S. dollar had a big day yesterday as well. It's been on a tear. Crude oil is down 32 cents in the September WTI at 69.67. Have a great day, guys. Be back on Friday.